Hi, for libertyandeconomics.com, I'm Nick Sorrentino. So what is an exchange-traded fund, an ETF? You hear a lot about it on CNBC. Some of the discount brokers will allow you even to trade ETFs for free without commission. I haven't looked into that exactly. There's got to be a way they're making money on that, but regardless, it's something you should know about if you're an investor. Uh, when I was a broker, exchange-traded funds were my favorite, by far, my favorite vehicle for investing. I like them better than stocks. I like them better than mutual funds. And the reason being, an exchange traded fund is essentially a basket of stocks that follows an index. For instance, one of my favorite, I just think this is kind of a cool exchange traded fund, is PHO, and it follows the Cascades Water Index. And basically, it's a basket of all sorts of um, companies that deal with water utilities, desalination, and so on. So essentially, it's a way to play water as a commodity um, through a simple brokerage account. Um, what ETFs allow the average investor to do is to essentially invest from a very broad swaths. There are some people that really enjoy and are good at picking individual stocks, and that's fantastic. That's great for them. Those people really are way fewer and farther between than you might think. Way fewer. Um, those guys on CNBC, trust me, like half you guys probably beat them in your own portfolio. But anyway, the way I like to invest, in the way my where my skill lay is actually kind of looking at the economy from a very broad perspective and looking at trends in society and looking at trends in the economy. ETFs allow me to do this. Um, like for instance, PHO. Long term, it's probably a pretty good bet. The more people um, they're on this planet, the more they need water. Um, the more we pollute water, the more we're going to need companies to clean water and so on. Um, and there are a myriad of other exchange traded funds that do a ton of different things. Um, and one of my favorites also, in addition to PHO, is GLD. Um, GLD follows the price of gold at 1/10. Essentially, a share of GLD follows the price of gold. Um, so, if gold at 1,000 an ounce, one share of GLD goes for $100. It's 1/10 the price, and it's a very good way for the average investor, or even the not so average investor, to hedge themselves without getting involved in, gold stocks or gold futures and trading commodities and that sort of thing. You don't need to do that. You can simply use the exchange traded fund. Um, now, you can think of an exchange traded fund as essentially kind of like an index mutual fund. Um, so it's that basket of stocks moving, from a mutual fund um, at the end of the trading day reaches a price. Okay, and if you decide to sell out of that fund, you're going to sell at the price at the end of that day. Whereas in ETF, you execute a trade, you get it at the price it's trading at that time, uh, intraday, as I say. And that's very good because you can do all sorts of things that you can do with a normal stock, and you can short it and so on. Um, but what's also cool is that typically the management fees for an exchange traded fund are very, very small since they're essentially an index. They follow an index. Um, you don't have to pay for a manager to manage these funds for you. In a mutual fund, depending on what company you're with, I mean, you could pay quite a bit of money um, for management that is often subpar. So, um, exchange traded funds are very good because they allow you to invest in broad themes. Um, if you think gold's going higher, you can buy GLD. If you think it's going lower, you can short it. Um, if it, it's just simple. straightforward. Um, they're inexpensive to own. You don't have to pay management fee. And like I said, some of the discount brokers are even allowing you to trade them for free. Uh, so you can put together a nice portfolio essentially with of you know of different indexes at very little cost, and that is the advantage of exchange traded funds. Um, I mean, there are many more, but those are what we're going to talk about right now. Until next time, next Martino.